To Edward Felton of Princeton University Center for Information Technology for a discussion of Bitcoin and the concept of virtual currency. Edward Felton, thanks for joining us from Princeton today. As we begin this discussion, a lot of viewers like me may be a bit confused and still fuzzy on the concept of what Bitcoin is and what it isn't. Can we start there? What is Bitcoin?
Sure. Bitcoin is a virtual currency, and so what that means is that there are a certain number of Bitcoins in existence, currently about 12.4 million, and the Bitcoin technology lets you hold those and lets you pay them to other people who have the technology. And so if you can find a person or a merchant who's willing to exchange Bitcoins for dollars, say, or a merchant like Overstock.com who will accept payment in Bitcoins, then you can use Bitcoins to buy things just like you would with some other currency.
And Bitcoin is known as a decentralized currency. How does that concept work?
Sure. What's really unique about Bitcoin is the technology behind it. And without going into all the details of how that works, it has a really interesting aspect, and that is that there's no central authority who issues Bitcoins, nor is there any central body that decides what the rules are. It's decentralized. Everyone who participates in the Bitcoin technology plays a small role in making it work. And the system's rules are really determined by consensus of the participants rather than by any central authority.
Edward Felton is the policy director of Princeton University Center for Information Technology. We're talking about Bitcoin, the concept of virtual currency, and we want to hear from our viewers as we do that with your questions and comments as we take you through this topic. Republicans can call in at 202-5853-881, Democrats 202-585-3880, Independents 202-585-3882, and if you're outside the U.S. in this segment, it's 202-585-3883. We'll have the numbers up on the screen and you can start dialing in. But Edward Felton, what is the history of Bitcoin? How long has it been around?
Bitcoin has been around for a few years. It was created initially by someone, Satoshi Nakamoto. That is a pseudonym, a pen name, if you will. We don't really know who the creator was. Some person wrote under the name Satoshi Nakamoto, wrote a white paper and wrote some software that was the initial life of the Bitcoin system. From there, people adopted it. It's grown a lot in popularity, and now it's becoming a very widespread currency. There's currently about $8 billion of value in the Bitcoin economy. If you can trade Bitcoins for dollars, and if you add up the value of all the Bitcoins, it comes to something like $8 billion. And there's roughly $100 million a day in payments that are handled by the Bitcoin system. So it's small compared to the dollar economy, but a sizable thing now.
And why would somebody want to use Bitcoin as opposed to dollar bills or using a credit card online?
Sure. Well, one of the things that's different about Bitcoin is that it's purely digital, and that means that you can send someone money from computer to computer or from phone to phone in a way that can be fast. It offers different security properties than a traditional currency. For example, transactions are digitally signed, which provides a stronger level of transaction than, say, just writing a check, stronger level of security. And also in some kinds of settings where the traditional banking system does poorly, where it takes a long time or there are high fees to do a transfer, it might be cheaper to use Bitcoin to transfer money, especially across borders. And so some people like it for that purpose.
And how is the price of a Bitcoin determined? Is there one person that sort of sets the price? Does it fluctuate with the market?
It fluctuates with the market. It's really supply and demand. There's a whole sector of businesses called Bitcoin exchanges, which create markets for people who have dollars and want to buy Bitcoins to meet up with people who have Bitcoins and want dollars. And so the price will fluctuate from minute to minute. So it's rather like buying some other currency. If you want to buy euros or Japanese yen or something, you just go to a market and the price is determined by who's willing to buy and who's willing to sell at which price.
You mentioned supply and demand. So how does a Bitcoin become part of the Bitcoin market? Where do new Bitcoins come from?
Bitcoins are created through a process that's called mining. The mining process is a bit complicated, but the idea is that you have a set of people around the world who are trying to find a solution to a particular complicated mathematical equation. And whoever finds a solution to that equation first it is given currently 25 new bitcoins. That's worth about roughly $20,000 today. That happens about every 10 minutes. So about every 10 minutes, another 25 bitcoins come into existence, and they go to whoever manages to solve this equation first. So the bitcoins have sort of trickled into existence over the several-year history of the system, and that will continue to happen.
Who sets this equation that they want people to solve? Who is the creator of this equation?
Well, that goes back to the original history of Bitcoin. In the beginning, it was the creator, Satoshi, whoever he really is, who set up this system. And as the system has evolved, the rules have changed in modest ways, really by consensus of the people who are creating and using the Bitcoin software. But the idea is that this equation solving functions as a kind of voting process, where the number of your likelihood of being the first to solve that equation depends on how many computational resources you're putting in. And so it's a way of kind of voting where people can buy or pay for the right to vote. And the miners are rewarded by getting these 25 bitcoins, but the value that the miners themselves provide to the Bitcoin system is that they help to keep it stable. And they help to create a public record called the public ledger that keeps track of everything that's happened in the system. So and so mining is...
Go ahead.
I'm sorry, go ahead.
So is this a reliable currency?
Mining is sort of a...
Is Bitcoin a reliable currency? We don't know who actually set this up to begin with, and you're saying the market can fluctuate. Do people see this more of as for speculation, or do they think it's going to be a reliable, lasting currency?
Well, there's a difference of opinion about that, and some people are investing in Bitcoin because they believe it will have a long-term history, that it will be used for more transactions. But really, you can ask, is it reliable in a bunch of different senses. You can ask, will the technology continue to function, or will somebody find a flaw that allows them in the technology that lets them steal all the Bitcoins? On that ground, people are relatively confident. You can ask, will the price crash? Will people continue to believe that Bitcoins have value and that people will accept them in exchange for money or goods? That's the other form of reliability. And we've seen that the Bitcoin price has gone up and down, but the currency has continued to function for several years now, and demand seems to be increasing. So there are people who are quite optimistic about that, and there are others who think that Bitcoin is one stage in our eventual transition to some future digital currency, which will be better and more stable.
Well, we talk about public policy issues here on the Washington Journal. How do federal regulators, lawmakers, both here in the United States but also around the world, view Bitcoin?
Well, they're trying to figure it out, I think, is the short answer. There are all kinds of rules, laws, regulations that apply to businesses like banking and derivative securities and money transfer services and so on. And governments are trying to figure out how those rules and regulations apply to Bitcoin-related businesses. One good example has to do with the laws about money laundering. If a business is engaged in buying or selling Bitcoins for dollars and they handle a lot of large value transactions, then they're going to have certain obligations to report, to know their customer and so on, in the same way that any other business handling financial transfers of that size would have. But really, regulators are trying to figure this out. Thus far, they've taken a relatively light hand and have tried to engage with the Bitcoin community for the most part to understand what's going on, and trying to find a way that consumers can be protected and money laundering can be limited while still allowing the technology to flourish. But I think we have a long road ahead of us in figuring out how government can operate on this.
Edward Felton of Princeton University Center for Information Technology is here helping to talk us through Bitcoin and virtual currency, to answer your questions, take your comments on this issue as we talk about it. We'll start on our Twitter page. Mr. Felton, Demental writes in asking you, Bitcoins over U.S. dollars, question mark. What do you think?
Bitcoins over, would I use Bitcoins over US dollars? I think that depends on what it is you want. Certain kinds of money transfers seem to be efficient to do in Bitcoins. Certainly the value of the dollar fluctuates less than Bitcoin, so if you want to store your your savings somewhere, dollars are certainly much safer. But I can see the argument for investing in Bitcoins as a risky investment, but potentially with high upside. You'll probably lose all your money, I suspect, but you might make a lot.
Let's go to Ron waiting in Boca Raton, Florida, on our line for Independence. Ron, you're on with Edward Felton of Princeton.
Hi, am I on?
Yeah, Ron, go ahead.
Okay, the name is Bob, not Ron.
Oh, sorry about that. Go ahead.
Okay, no, to me the whole thing sounds like a scam. You use language like you say you mine Bitcoins. Obviously, there's nothing tangible about a Bitcoin. What would stop anyone who controls this, and there's a mystery about who really is controlling it, what would stop them from creating as many units as they want to enrich themselves or to cause other people to buy them, and then the whole market crashes? As I say, then I think you would agree, because you yourself said you'll go broke eventually, that this is like a tulip craze in Holland, and then it'll eventually just die out as a huge scam. What are your thoughts on that? I'll take my answer off the line.
Edward Felton.
Sure. Well, I don't think it's a scam. The Bitcoin system is designed in a very clever way that makes it very difficult for anyone to get control of it. The rules of Bitcoin and the official history of which transactions have occurred and who owns which coins is maintained by a kind of consensus that thus far has been very stable. Now, it's true, on the other hand, that Bitcoins are not backed by gold or any other commodity. They're not issued by any government. And so the value that a Bitcoin has exists entirely because people agree that because people expect that other people will accept it. But that's true to a large extent of any kind of money. The value of it mostly comes from our expectation that other people will continue to accept it. And to the extent that Bitcoin maintains that expectation, it will continue to be valuable. And although the price has gone up and down over time, the fluctuations have all been around a pattern of relatively steady growth. My own belief is that I think digital currencies are here to stay. They're going to be an important technological development. Maybe Bitcoin will be the one that wins and becomes successful in the long run. Maybe something else will supersede it. But I don't think it's quite right to say that this is a scam. This is a new kind of financial technology that's a little bit surprising. And we might not have predicted that it would be as stable as that one would be able to design a system that proves to be as stable as Bitcoin has. But I think people are becoming convinced that something like this can actually survive for the long haul, and that there is a soundness to it in its design, even if it still relies on people just agreeing that this is the currency that they want to use.
Edward Felton, let me get you to respond to this description by Jody on Twitter. She says, Bitcoin is like bartering. It is as valuable as one values it. Is that accurate?
I think that's exactly right. It is as valuable as one, or as the market generally values it. And thus far, the market has given it a value. Right now, the current total value of Bitcoins is measured in the billions. And that fact has been true for some months now, after growing from a smaller value. But it is absolutely true that if the consensus shifts and people decide Bitcoins are not the thing, they're not valuable anymore, then they're not valuable, and folks will move on to something else. I would predict they move on to some other digital currency then.
Let's go to Joe, waiting in Carmel, Indiana, on our line for Republicans. Joe, good morning. You're on with Edward Felton of Princeton University.
Yes, I want to hear more about worst-case scenarios. In the Federal Reserve was created 100 years ago because J.P. Morgan was the go-to guy in a financial crisis, and they didn't want the whole country dependent on J.P. Morgan to organize a bailout as one man. Who's in charge of backing up, of fixing problems in worst-case scenarios, which can be technological, they can be economic, they could be all kinds of things, and if nobody's really thought all these worst-case scenarios through, this is ridiculous and do you own any Bitcoins yourself, and do the most sophisticated technologically people that you know, do they own Bitcoins?
Mr. Felton.
Well, let me take that in reverse order. I have owned Bitcoins. I don't happen to own any at the moment, but not because I'm opposed to them. It's just that my Bitcoin wallet happens to be empty at the moment. And I know a lot of technically sophisticated people who understand Bitcoin very well as financially sophisticated people who have invested in Bitcoin and believe that it has a strong future, and others who disagree. It's a matter, I think, of genuine debate. In terms of sort of who's in control, question of who's in control, this is one of the hardest aspects of Bitcoin to wrap your mind around, and that is that there really is no one is in control and everyone is in control. And what I mean by that is that any change in the rules of Bitcoin or in the operation of the system that is agreed to and supported by a substantial majority of the Bitcoin users will happen. It's really a kind of consensus that emerges out of the system, and the stability of the system relies then on there being a broad and diverse set of people who are involved. And thus far, that's proven to be the case. There have been some, I wouldn't say crises, but some technical issues that have arisen a couple times over time, including one recently. And the community has been able to organize itself and deal with it, to make an adjustment in the Bitcoin technology or to make an adjustment in the rules, which is able to get past the situation. And so I think there is some encouraging evidence that Bitcoin is able to cope with challenges. Now, we haven't seen a major crisis in which there is a big risk of failure of the currency, but it's not out of the question that the community will be able to cope with that as well. It seems to be well organized enough and able to act when something needs to be done. At least that's what it's looked like so far.
I want to read you a little bit from the current account column in today's Wall Street Journal, talking about this being a turning point for virtual money, is the headline of the column. It notes that after weeks marked by technological breakdowns, regulatory issues, and general questions over its viability, Bitcoin is in the midst of its worst crisis since it was proposed in a white paper in 2008. The turmoil is a watershed. The way Bitcoin and its ecosystem react to the problems could determine whether the whole experiment goes the way of Dutch tulips in the 1600s or becomes a historic technological breakthrough like email. Would you agree with that assessment of the current state of Bitcoin?
I would not go that far. There's currently a challenge in the system due to a technical problem called transaction malleability. But the community is responding to it. It's certainly the case that this has been the highest profile challenge or crisis that the Bitcoin community has experienced, but that's really because Bitcoin is just getting a lot more attention right now. I think the longer-term issues that Bitcoin faces are more around regulation and what happens when if the currency scales to a much greater level of usage than it has now, which puts strain on the technology in some ways. I would say that the current issues around transaction malleability are definitely a bump in the road, but something that the community is dealing with.
Can you explain transaction malleability for us?
Sure. And I hate to drop the jargon, but that's the thing people are talking about. Very briefly, you can think of a Bitcoin transaction as being somewhat like writing a check. That if I want to pay 1 Bitcoin to you, I'll create a digital object, which is the transaction. It says I'm putting in 1 coin, you get 1 coin out, and I'll put my digital signature on that to authorize the payment. And the transaction has what's called the transaction ID, which you can think of as being like the check number. So what this transaction malleability business is that people have figured out that there are ways to modify the transaction after it's been signed. And you can't change the details of payment. You can't change that it's OneCoin that's being paid, or that I'm paying it, or that it's being paid to you. But what you can do is cause the transaction ID to change. And so you can imagine that if some company's Bitcoin software is trying to sort of balance its Bitcoin checkbook and trying to match up the transactions that it thinks it made with the transactions that have showed up in the public ledger, if the transaction IDs don't match, then there can be some confusion. And that's a problem that some companies have had to deal with. There are rumors that some companies that didn't account for this issue, which has been a known issue for a couple of years technologically, may have lost some money. But the system seems to be moving along, and a solution is in the works.
Helping us out this morning on the Washington Journal to explain Bitcoin and virtual currency is Edward Felton. He is the Robert Kahn Professor of Computer Science and Public Affairs at Princeton and the founding director of Princeton's Center for Information Technology Policy. He also served as the first chief technologist at the U.S. Federal Trade Commission, and he's here to answer your questions and comments. And John is up next from Red Bank, New Jersey, on our line for Democrats. John, good morning.
Thank you. The first caller had laid out a frightening fact pattern for manipulation and fraud in digital currencies. My question is, to him, is what makes him think that's not happening now with a fiat-based currency we currently have? But my real question here is, many people perceive that the Federal Reserve is a so-called public-private agency unduly influenced by private banking elites with little or no transparency. What challenges will digital currency have to that power structure elite?
Mr. Felton.
Well, I think digital currencies offer a different kind of model of governance of a currency through this kind of consensus system that exists in Bitcoin. Some other digital currencies have other governance structures. Some of them would have a company that issues the currency that plays more of a governance role. But really, I think the Bitcoin model is the one that's most different from traditional currency models. And this idea of a currency governed by consensus rulemaking is something that hasn't really existed before, and that only becomes possible because of the way that Bitcoin is able to use cryptography and distributed computer algorithms to design itself. So it is a new kind of thing, a new governance model, and I think time will tell how well it does in comparison to traditional national currencies.
Let's go to Gene, waiting in Herndon, Virginia, on our line for Independence. Gene, we're talking Bitcoin and virtual currency. You're on with Ed Felton. Good morning.
Hi. Every time I hear comparisons with Bitcoin and other more recognizable forms of currency, such as dollars or credit cards, there always seems to be a comparison left out between Bitcoin and something such as PayPal. The descriptions that I've heard of Bitcoin to me seem very similar to PayPal, so I was wondering if the guest could explain a little bit about why somebody would use Bitcoin as opposed to PayPal.
Sure. The difference really is that PayPal is a system that lets you transfer dollars. PayPal allows online, and businesses like it allow online transfers, but you're fundamentally transferring dollars, and you're doing it by connecting to either bank transfers or the credit card system or some mechanism like that. So it's a more convenient way of doing traditional dollar transfers in the financial system. What's different about Bitcoin is that Bitcoin creates this new currency, this new thing you can own, a Bitcoin, which doesn't have a fixed exchange rate with dollars or any other currency, and therefore that Bitcoin, in a sense, has its own economics, which operates a little bit separately from the dollar economy, and that's why it's different, and that's why it is harder to understand and predict how it might behave, and why it might, and I think things like Bitcoin probably will open up new kinds of financial technology opportunities that people are still figuring out now.
Got about 15 minutes left with Edward Felton of Princeton University. You can also Follow him on Twitter at Ed Felton. But he's here to answer questions from our viewers. Paul is calling in from Missoula, Montana, on our line for Democrats. Paul, good morning.
How are you? Thanks for taking my call.
Go ahead.
Mr. Felton, I'd like to ask you a question about this issue. This sounds like to me as though we are paving the way to a cashless society. The reason I say this is because I personally do not have a computer, do not engage in computer technology. I do not have a checking account. I have 2 savings accounts. I admit I am retired. I am disabled. I live on a disability, and I make all of my transactions in cash. Now, am I going to be excluded from this technology simply because I do not engage in computer technology, which I find, by the way, to be intrusive and invasive?
I don't think that that something like Bitcoin is going to drive cash out of existence. Cash has advantages that that you understand well, that a lot of people like. Cash is fast. It doesn't require you to identify yourself for low-value transactions, which a lot of people appreciate, and it's widely recognized. On the other hand, cash is inconvenient in some senses. It's difficult to transfer cash to someone at a distance, and it can be dangerous to carry large amounts of cash or to store large amounts of cash other than in some kind of institution. So I think we'll see a mix of both things. I don't think cash will go away. But in any case, a lot of people do a lot of finance these days in an electronic form. So I think Bitcoin, to the extent that it becomes a big success, if it does, will be displacing current electronic financial actions rather than displacing cash.
Ed Felton, a lot of questions about worst-case scenario events for you this morning. Scott asked on our Twitter page, what happens to Bitcoin in an electromagnetic pulse event?
Well, it depends if you've backed up your computer. If you have now, if you own Bitcoins or are using them, there are a couple of different ways you can go. One is to store the Bitcoins or the secret keys that protect the Bitcoins on your own computer. And in that case, you better hope you backed up your computer, because it's like storing cash in the mattress. If the house burns down, then it's gone, and there's no getting it back. But some people use online services, or they rely on businesses or services that help them to store their Bitcoins. And so if you're using such a service, and if they have taken precautions, and there are different ways of backing up Bitcoin, you can back them up in the same way you back up a regular computer file. There are ways of taking a Bitcoin and printing them out onto paper, and then you can put them in a safe deposit box and scan them back in later. Because a Bitcoin is just a file on your computer, it's just information. Really anything you do to protect or back up the other forms of information, you can do to protect your Bitcoins. And there are a lot of people thinking about how to do that. That said, if you do have Bitcoins and you're storing them themselves, you really ought to have a backup.
Let's go to Jess in Laurel, Maryland, on our line for Independence. Good morning, Jess. You're on with Edward Felton.
Good morning. A little earlier you were talking about mining Bitcoins, and I understand that the complicated math problem you solved is not just any math problem. You're actually verifying other Bitcoin transactions. So my question is, when we reach the theoretical set limit of Bitcoins out there, who's going to be willing, assuming this is a long-term technology, who's going to be willing to verify those transactions in the future when there's no more Bitcoins to give out?
Sure. Well, that's a great question. And to put the answer in context for other viewers, let me explain a little bit of background here. And that is that, as I said before, about every 10 minutes, a new Bitcoin block is made, a new entry in the public ledger is made by miners, and there's a reward of 25 Bitcoins that is given to whoever succeeds in doing that. But that reward of 25 Bitcoins is scheduled to be cut in half in, I think, a couple years, and then in half again a few years after that, and so on, so that eventually it will get close to zero. And the question is really then what happens to currently the Bitcoin system relies on these rewards that are paid out to miners every 10 minutes in order to motivate miners to participate in this system, which keeps the Bitcoin public ledger stable. And as the reward for doing that goes down and down and down, what happens to keep people motivated to participate in this mining process? And the answer, I think, there's just some disagreement about this, but my belief is that the Bitcoin community will eventually decide to change the rules so that the reward to miners doesn't go down to zero and more Bitcoins continue to be made at a steady rate. That would solve the problem. But one way or another, there's going to have to be some way of continuing to reward miners for as long as Bitcoin goes on. But I think it's within the capacity of the Bitcoin community to agree on a rule change that would stave off that problem. And in any case, the problem that we're talking about is something that won't happen for at least 5 years from now, which in the history of Bitcoin is really an eternity.
You talk about there's no central bank per se for Bitcoin, but what is the Bitcoin Foundation?
The Bitcoin Foundation is an organization. It's a nonprofit that serves as a kind of. It does two things really. One is that it serves as a kind of a public forum or spokesperson, if you will, informally for the Bitcoin technology. There's nothing official that makes the Bitcoin Foundation in charge of the Bitcoin technology, but it is an organization that was created to be a voice on behalf of Bitcoin businesses and Bitcoin users. That's one thing it does. The other thing it does is it manages the development and distribution of the most popular software that people use to access Bitcoin. Again, there's nothing that is special in principle about that software. It's just the version that most people happen to use. And so the Bitcoin Foundation has been a focal point for a lot of discussions about the technology, even though it doesn't institutionally within the design of the Bitcoin technology have any special status.
Does that group have any relationship with this mysterious person that set up Bitcoin?
Well, we don't know. We don't really know who this mysterious Satoshi is. There are various theories about who it might be, and at Bitcoin-related conferences, there's a lot of cocktail party discussion about who is Satoshi, but really nobody knows, and so we can't say whether that person has something to do with the Bitcoin Foundation or not. But I think the fact is there's a lot of focus on Satoshi and the mystery of who really created Bitcoin. But nowadays, even if Satoshi did sort of step out of the shadows and identify himself or herself or theirselves, that they would be viewed as speaking with some authority about Bitcoin, but they wouldn't be in charge. Because the really notable feature of the Bitcoin technology is that no one really has direct control over how it operates. And in fact, that's why the system has been able to succeed, even though we don't know who created it, and even though the creator has not been heard from publicly for a couple years.
You note that there's, over the past couple years, there's more and more groups that are buying and selling goods using Bitcoin. Jewelry maker Jay on Twitter asks, how is Bitcoin taxed?
Well, it depends what you're doing with it. If you're a merchant and you're accepting payment in Bitcoins, then probably what you're doing is that your customer is buying Bitcoins is exchanging dollars for Bitcoins somewhere else. Then they ship those Bitcoins to you, and then you, as the merchant, probably trade those Bitcoins back into dollars. You might even use a service that does that for you. But at the end of the day, you end up with a bunch of dollars that you got through that sale, and you'll be taxed, as I understand it, you'll be taxed on those dollars. If you're engaged in buying or selling Bitcoins as an investment, well, then I guess consult your lawyer. I certainly don't want to put myself forward here as an expert on Bitcoin taxation. But bottom line is that if you are engaged in Bitcoin businesses, you're probably going to want to end up with dollars, and those dollars are something that the tax system knows how to talk about.
Phone lines are open to talk to Edward Felton about Bitcoin and virtual currency. And Lorenzo is up next, calling in from Illinois on our line for Democrats. Lorenzo, good morning.
Good morning. I was calling to inquire, I guess you kind of touched on it just recently, about will it ever be able to be used as an investment purposes using the buy low, sell high model. And also if you can touch on the time lapse between the exchange from Bitcoin into cash.
Sure. Bitcoin is used by some people now and has been for a while as that form of investment. Someone could go and buy Bitcoins today and hold them, and then in the hopes that the price will go up, and then sell them later. And there are some people, and there's an active sector of people doing that. As far as what the delay is, there are two answers to that. One is, how long does a transaction, a Bitcoin payment, take to clear, if you will, within the Bitcoin technology itself? And the answer is typically about an hour. But then if you're doing business, let's say with a Bitcoin exchange, you might want to transfer money to that exchange via a bank transfer or via your credit card. And how long that takes can vary a lot depending on how close your relationship is with that business. It could be very fast, like a credit card payment, or it could take a few days depending on how it's going. If you are an active trader of Bitcoins, you can probably get back and forth between Bitcoins and dollars on a time scale of something like an hour. If you're new, it might take you a few days.
Sorrell's waiting in Ruckersville, Virginia, on our line for Republicans. Sorrell, good morning.
Good morning.
Go ahead. You're on with Edward Felton.
Yes, good morning, Mr. Felton.
Go ahead. He's listening.
Good morning.
Yes. Could the Bitcoin Foundation federally produce and gold bullion through Princeton University's personal treasury investors to be governed to a state welfare currency policy?
I'm sorry, Sorrell, what was your question?
I'm not sure.
Yes, I'll ask it once again. Could the Bitcoin Foundation federally produce a gold bullion through Princeton University's personal treasury investors to be governed to a state welfare currency policy?
Edward Felton, if you have a response to that?
Well, I'm not sure I understand the question, but I think, but I guess I would say that the Bitcoin Foundation or Princeton University or anyone else doesn't really have the power to govern Bitcoin the way it works now. Any change that happens in Bitcoin or how it works really is something that has to emerge from the Bitcoin community.
Let's go to William waiting in Bay City, Texas, on our line for Independence. William, good morning.
Yeah, good morning. Yeah, I just wanted to comment originally about who made Bitcoin, but seeing how you answered that, just wanted to say I've been using Bitcoin since 2009 on the Tor network, and I just feel like it's kind of lost its practical usage now that it's worth like 600 each. So can you kind of comment on that? How it's not as practical anymore now that it's worth so much?
Mr. Felton.
Well, certainly the value of Bitcoins, the exchange rate for dollars has gone up a lot. I remember when it was less than $1 per Bitcoin. It's currently around $600 per Bitcoin. But Bitcoins can be divided into smaller units. You can transfer the equivalent of Bitcoin pennies to someone through the system. And so I'm not sure that it's less practical in that sense. Now, but one thing that is true is that as there are more people using the Bitcoin system, that the sorts of fees or commissions that one ends up having to pay to do Bitcoin transactions have gone up somewhat, not a lot, but certainly it's not the case. It's made a transition, I think, or is making a transition from being what was once a kind of hobbyist technology to something that has larger businesses and bigger investors involved in it. And so there's a kind of professionalization of the Bitcoin community that's going on right now, and I think will continue to happen. And that does mean a change that changes what it feels like to be a participant in the system.
Jim on Twitter pointed out that nobody has asked if you can pay your tax bill with Bitcoins. Do you see the federal government ever accepting Bitcoins?
Well, I think it would be a long time before that happens. You have to pay your taxes in dollars now, and I think that's going to continue. But I do think that if Bitcoin becomes a popular medium of exchange, if it's used a lot in transactions, then you'll start to see larger institutions accept payments in bitcoins. There are some technical advantages in terms of speed and perhaps in terms of the cost of processing transactions. But certainly I wouldn't expect the federal government or any large institution to be among the first adopters. I think they'll be later to the game if, in fact, Bitcoin becomes that popular.
And Ed Felton, in the last minute or so we have left here, one last tweet from Irish Eyes, who asked, if I want to buy Bitcoin in person instead of risking an online ripoff, how do I find reputable agents?
It really depends. There are sites you can use online to find people who are offering to buy Bitcoins through a physical meetup in your area. But as to how to tell whether those people are reputable, that's more difficult. I really don't have an answer for you on that, except to think about it in the same way that you think about buying any kind of unique object in an in-person transaction. Right? You want to ask, does this person have roots in the community? And you want to look for other indicators of trustworthiness. But I don't think that there's an easy answer to that.
Edward Felton is Princeton University's Policy Director of the Center for Information Technology. Again, you can follow him on Twitter @EdFelton. And we appreciate you joining us for this discussion on Bitcoin today.
Thanks. I enjoyed it.